Okay, let's get a perspective on price action as well. Jai Bala of cashthechaos.com is joining us. Jai, good to have you here. I think you were spotting a head and shoulders on the Nifty and maybe a couple of sectoral indices like the auto index, etc. So update us with how your views have changed looking at the price action today.
That's right, Prashant. See, the markets are very clearly signaling that, the fresh record highs registered in 2022 is unsustainable. It's come off 684 points from the all-time highs registered in December. This is not a sign of strength. And as I pointed out in my tweet and, sent it to you too, there's a head and shoulder breakdown on the Nifty as well as the Nifty auto index. And auto has been the leader for the market. So this is, again, not a good sign. But the takeaway from here is that we still don't have a critical support breakdown on the Nifty, which is about 18,130, which I've been repeating for the last 3-4 weeks now. And that is still to given. My sense is that the market will stay below 18,738 into the year end, probably lifted by some NAV propping by mutual fund managers. Or the market, Santa could come on bear instead of reindeer and surprise the market and break the 130 support. So we're just watchful of what the market is going to do.
All right. Well, hi, Jay. Good afternoon. Let's talk about a couple of stocks then, Jay. Before we get back to the indices, I believe you're positive on Havells, but you're not too positive on Indian hotels. You believe it's showing signs of tiring out.
That's right, Nigel. Havells, given the move from 2021 highs, it still looks choppy and a bullish consolidation. So I'm being a little bit conservative here. I think the recent low of 1139 for the stock will hold, and it's possibly heading to fresh record highs, but I'm taking it a bit more conservative. I'm taking it as a price move towards 1300 as a corrective price action, given that my overall view on the market is slightly negative. So I'm being a little bit conservative. It could even push to 1500. When it comes to Indian hotels, like you correctly pointed out, the momentum has completely faded off there, and it's looked like it's clocking a double top there. So I think it's heading somewhere close to 269. Probably, I'm slightly preempting it, but if a stop about 340 itself is ideal, but I'm being a bit more conservative here, keeping a stop at 349, expecting 269 to get achieved in probably 2 to 4 weeks time frame.
Auto has been one of the stronger pockets this year. It's rallied close to about 18%, particularly in the second half of the year. Your thoughts on the index? What are the charts telling you?
Are you talking about IT, Rima?
Auto, the Nifty auto index.
Okay, see, the auto index, the critical support is about 12,600 to 400. But as I mentioned earlier itself, it's already breaking below, a head and shoulder pattern. But since it's been strong for the whole year, now I want to see a lower low clocked on the auto index. That comes somewhere about below 12,600 and 12,400 if you want to be conservative. So let the index go below that. And two-wheelers, specifically Tata TVS Motors, is actually quite strong on a relative basis, but even that's starting to cave in. But Tata Motors is one of the weakest, and Maruti of late has started to weaken a lot. So there are pressure building in that space. So be very careful over there.
The big move from a global macro point of view is the yen, right? And we'll have more on that with a sort of global guest in a bit. But big 3.5% move on the yen. Have you thought about what this means? What are spillovers? What are we likely to see going forward?
Yeah, this is pretty much on expected lines, Prashant. It's not a surprise at all. I had put out a note on the 8th of November on the yen on its long-term picture. The 152 level is actually 50% retracement level of the 1970s to the 2000 level, the lows it registered in 2000. So it's a 30-year retracement level and a very strong 50% exact Fibonacci retracement level. So we're going to see some strength somewhere close to the 130 mark, but the strength in the USD JPY cross is going to start to resume once this correction is done. But we're going to see short-term strength for the yen. Later on, from a medium-term perspective, the dollar will start gaining strength and yen will head somewhere close to 168.
All right, Jay, let's talk about the biggest weight, on the index as well as the key mover, the Nifty Bank. What are the levels you're tracking out there? It's been hovering around this 20 DMA. Do you see it breaking down a little bit?
Yeah, if you look at the heavyweights like ICICI and SBI, they are clearly showing signs of crack. If SBI were to go below 590 on a closing basis and ICICI were to go below 890 on a closing basis, I think that calls for a lot of caution. But as long as the index stays above 41,840 and 4,800, it's a little bit safe. But if we see one more heavyweight like an Axis or a HDFC Bank cracking, then the index is done. Although I would say that some of the PSU banks, like Central Bank of India, Canara Bank, they may still have one more higher highs to do, but tread that with caution. Use that opportunity to book profits. So I would say the frontline names are cracking, but PSU banks might still have a little bit of steam left.
Anything which looks attractive to you in the IT pack now, technology?
See, IT index, I've been bullish on a short-term basis. I've been treating the rally from September as a short-term bullish trend. And 2 weeks ago, I had warned people to book profits on the bullish names that I have been mentioning for the last couple of months. And a persistent, I've been liking it the most. If I would like to see it pull back somewhere closer to 3,600 and then hold and then rebound from those levels. If it does that, I think it's heading to fresh record highs, which is what I thought in September. I want a reiteration of that. Right now, I'm a bit more conservative on that. But if an IT index were to crack 28,000, that will bring to question the September lows. But we can't preempt the market. We want to see the break of September low, but 28,000, if that goes, you want to be a bit more caution and concerned about the overall IT space.
Jay, thank you very much for joining in. That's the view coming in from Jay Bala that the Nifty high that we saw in 2022 is